value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Here we are in December, heading towards the end of the year for the financial markets.
Yeah, boy, what a quick year. Is it true that November was one of the very best months ever on the stock markets?
Well, I actually saw someone on Twitter show that it was the best month of November for the U.S. stock market going back to about 1990, over 30 years basically. So it was certainly a tremendous month. And almost everything went up, except gold. But we'll talk about that in a few moments. But I think it's important to realize that, you know, even though it was one of the best months or best November in a very long time, the S&P 500 is only up about 10% for the year. It started the year around 3,300, and as we're speaking, it's at around 3,650. And that great November also happened because the stock market pulled back a little over about 10% from the peak of Labor Day and was falling right into the election. And when election day happened, it then began to rally. So it took a pullback to get, you know, we took a lot of the losses. We took all the losses back and then went up another 100 points on the S&P 500, basically. And if you can recall, I mean, 6 weeks ago, people in the United States were worried about, some were saying if Biden won, the stock market would crash because of socialism. Others were saying that if Biden won, that Trump would dispute the election and there'd be a lot of chaos. The Proud Boys would get angry and all these kind of things. In reality, the election has been a bit chaotic, but the stock market has not cared because it fully discounted it, I guess, going into it. And so we're going up. And we had a good week last week with Thanksgiving. And typically, the stock market does tend to pause seasonally or even dip a little bit in the first week of December and then set the stage for gains going into the end of the year. So this pattern seems to be lined up once again.
Is it interesting that the election results didn't have the disastrous predicted effect on the markets?
Well, my feeling is that it hasn't really changed that much because so far the Senate is in control with the Republicans, so they can kind of block a lot of what Biden might have wanted to have done. And in the end, that means that the Treasury Department and the Federal Reserve are going to be the main drivers going forward. But that was the case before the election. So in a certain sense, the big economic picture of the government and what it might do or might not, I don't think has really changed. And as far as the culture and what you see on television, on the political channels, it's no different either because it was all split with bipartisanship and a lot of anger and fear on both sides, and that's just going to continue going forward. So, in my view, not really much has changed with the election at all.
Do people pivot into certain sectors depending on who's in the White House? Some administrations prefer, say, oil and gas. Others are more interested in financials.
Yeah, normally they do, and that actually happened when Trump got elected. There was a huge shift into industrial stocks, companies that were big donors of Trump, such as the steel industry. They had a big lift with the expectation that Trump would do tariffs to really help them, or in some cases even give them assistance, which happened with coal companies. So there was, but this time there has been a big shift from what was going on in the sectors in the market in the summer. But I don't really see it being necessarily Biden specific, but instead a shift into stocks that had been lagging for months and were most vulnerable to, or most hurt to the shutdowns in the economy, such as airlines, casinos, cruise ships, restaurants, smaller companies. These stocks, for the most part, a lot of them had very heavy short positions, and for whatever reason, after the election, there was a huge rush into them. You can look at a stock, for instance, Wynn Resorts was trading at $70 in early October, and it was at $70 in August, $70 at the end of June, and now it's at $104. And I think what kind of drove that is two things. One, what had been leading the market were the stocks, the big cap tech stocks, the Facebooks, the Netflix, the Apples, and money simply came out of them and needed a new place to go, so it went into these stocks that had been lagging and could possibly catch up, and they basically have been doing that. Secondly, I think we may have spoke about this right before the election, but I was thinking, okay, after the election, what will be the next event that people would want to sell or buy into? Because traders need new things. Once the election's over, they're going to want something new to think about. Well, that was going to be an eventual news about a vaccine. We knew coming into November, I mean, it was just in the news, public knowledge, that by Thanksgiving, there would be news about a vaccine approval or submission of approval, some sort of results. Well, those results came out a week after the election. So all these companies that have been suffering, and still are, their stocks got bid up with the thought now that everyone has, is, look, this pandemic will not last forever, and we can now see light at the end of the tunnel. In fact, even though cases are going up, deaths are going up, hospitalizations are going up, and the projections are that's going to continue until mid-January, but it will peak. And when it does, it will slowly fade, and eventually it looks like it will go away. So that's hope at the end of the tunnel, and traders like to buy ahead of events, not wait for good events to happen. They buy ahead and then sell. So I think if there's going to be a window of real vulnerability in the stock market, it'll likely be in the second half or perhaps even the fall of next year, because once things return more to normal, so to speak, there will be a lot of pent-up demand, and that should boost revenue and earnings for companies for at least a period of time, increase over the summer, and that could be the next thing people buy into. But then once that pent-up demand kind of peaks out, we could see eventually a window of vulnerability, but that's down the road, and we can analyze things to see if that's a real danger or not. But for now, I think we got a good New Year's ahead of us, a good next couple months ahead of us, because things are bad now, but people like to bet on a better future when it comes to stocks.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, while the stock market went up in November, gold came down a bit. Why?
Well, that's a good question, and it's one of the most unusual dips in gold I've ever seen, because typically gold trades opposite to the U.S. dollar, and the U.S. dollar went down too in November. And gold, and silver trade of other commodities and other metals, but almost every other commodity went up. Oil went up a little bit. Agriculture commodities went up, and some other metals like copper went up. But gold and silver went down anyway. Very unusual. And I'd never seen it before in my trading, but I've only been doing this since 1999. So I had to go talk to someone a little older than me and ask them, has this ever happened before? And they said, yes, it actually happened around 1992. So, that's an interesting curiosity. But as far as why it happened then, I think, the only real explanation I can give is that we had been in a bit of a correction in gold since early August when it got near 2100. It looked like it was ending, when things sort of stabilized in October and right before the election at 1850. And we went up for about a week, and then whoop, it turned right around right when the vaccine news hit, and then fell all the way down below 1800. So in my view, the final drop was simply a continuation of what happened when it peaked in August, and also gold seasonally has a pattern of having its worst months in October and November, and its best 2 months in December and January. And it looks like this is again repeating right in front of us. And also, I think it's really important to point out that I just view this as a normal correction, not a big deal. And I'm very bullish on gold going forward. The U.S. dollar is making a new low today as we speak for the year. So I think the picture is very bright for gold, not just seasonally, but for the next couple years. And as confirmation that we really have seen an end of this correction, the most reliable indicator that I know when it comes to gold is the performance of mining stocks relative to the metal. So the mining stocks tend to lead the action in the metal. When they go up faster than gold, that's good. But if they go down and gold keeps going up, that's a very bad sign. In fact, in the year from the summer 2011 to 2012, gold stocks didn't go up anymore, and gold kept going up, and silver went crazy, and that was a sign of the final top of that last real cyclical bull market. And this year, in July, in a small way, for about a week, gold stocks, the GDX ETF, for instance, stopped going up. The final 5 days that gold went higher, that was a warning sign that some sort of short-term top was being put in. Not a major top, but a short-term top. And then it came. Now, what's exciting about this, though, is on Friday, gold dumped $30 right off the open, but the GDX went up. And then on Monday, gold once again fell just about $20, and the GDX went up again. And yesterday, the GDX went up again when gold went down. So this is, to me, a very powerful, positive divergence, the most powerful buy signal I know when it comes to identifying bottoms in gold, silver, and the mining stocks. So my belief is that now is the time for people to load up the bus if they want to buy more or don't even have any positions. They got to get involved now. This is the time. And crazily, on Monday, there are a couple high-profile people that have followings of hundreds of thousands of people on YouTube declaring that was time to sell gold on Monday to buy Bitcoin. Probably the most reckless call I've ever seen in the financial markets, but they made it. And I don't care if you think Bitcoin is good or bad. You certainly don't want to be selling gold right as it's bottoming to buy it.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, there seems to be Bitcoin mania going on. It reminds me of 3 years ago because Bitcoin hit $20,000 right on my birthday in December, and it may do the same thing again. Does it follow a definite cycle? And when it hits the 20 grand mark, is that a warning signal?
Well, it's done that over the past couple of years, as you point out, and it just did it Thanksgiving week. It hit 20,000 and dumped, basically. I don't really have an opinion on it in that sense of what the potential top or bottoms of it is, because it has no intrinsic value. You can't tie it to earnings, or assets or anything. Like, if you want to value a stock, you can say, well, it's got this amount of earnings, it owns these assets, so it's got a book value. And, you know, if it falls below that book value, it's a super discount. If it trades at a massive multiple earnings, you know it's overvalued. But Bitcoin has no metrics. So the only thing to go by it is price action and then trying to predict off of that. And so in that sense, I really have no opinion. However, I will say this about it. You know, what does it trade with? You know, you can measure one asset against every other asset in the financial markets and figure out what does it trade with or against. So, for instance, gold historically will trade up when the U.S. dollar goes down. It's negatively correlated. Gold stocks, on the other end, are positively correlated. You know, when gold goes up, a company like Newmont is going to benefit, and so their stock is going to go up. Well, what does Bitcoin trade with? It trades with the NASDAQ is the answer. There are Bitcoin promoters that claim it's a safe haven, that you should buy it because if the stock market crashes or the dollar, you know, goes into hyperinflation, then Bitcoin is supposed to go up and act as a safe haven. That is the biggest myth there is in the financial markets, because Bitcoin has never done that. In fact, in March, when the stock market fell 30%, Bitcoin fell over 60%. It was a complete debacle for anyone that came into this year owning Bitcoin. Bitcoin has never gone up over a couple weeks when the U.S. dollar has gone down. What Bitcoin does is act as an instrument of speculation that tends to magnify the move in the NASDAQ. So now Bitcoin is going up, or has gone up faster since October to now, but I think that's because people are getting more and more excited and bullish over the stock market. As the stock market and the NASDAQ have gone up, Bitcoin has gone up faster. And that's what it did on your birthday, as you mentioned in 2017, when Bitcoin hit 20,000, there's an acceleration in the stock market rally that year, in November and December. And then Bitcoin collapsed and the stock market fell, over 10% in a flash crash type event, in early February. So I think if people want to buy Bitcoin and trade it, okay, you got a trading system, you got some patterns you're playing and so forth. And I think it can go up a little bit more next year because I think the stock market can go up a little bit more next year. But whenever the stock market has another correction of 20% or even 30%, and one will come, I don't think it's coming this month or in the next 6 months, but it could happen by the end of the next year, the year after. But will come one day. When that day comes, there will be a complete wipeout in Bitcoin, another debacle, because there always is. It's always a disaster when the stock market pulls back. So if you want to, so to me, playing Bitcoin is equivalent to going on margin in the stock market. It's a way to get in something extremely speculative or increase your risks, because you want to make more money than you would otherwise. So if you just want to, on one hand, that's okay. If you got like $50 and you don't really have any financial assets, and this is sort of like playing the lottery, and you're trying to make a giant return, like someone might bet on the horses or something, okay, put in $50 like you buy a sports book ticket on Bitcoin. But if you want to invest a large amount of your money, that's just scary to me to do that by dumping it into cryptocurrencies.
What are the Robinhooders up to right now?
Well, let me tell you, I haven't looked at that in about 2 weeks. I'm loading it up as we speak. What Robinhood does is track the 100 most owned stocks by Robinhood account owners and rank them by ownership. So as we're speaking, number 1's Apple, 2 is Tesla, 4 is on the list. Got American Airlines, Delta, Carnival, Moderna. I don't really see any big changes from when I looked at this 2 weeks ago.
The people into Robinhood ignore gold, don't they?
Yeah, that's what I'm about to tell you. I'm going down to all these 100 top stocks, and there isn't a single gold stock on the list or metals ETF at all. There are companies, frankly, I've never even heard of, like Lie Auto Incorporated, Xpeng, I never heard of that. So AstraZeneca's on the list, but it's no gold on there yet. Aurora's going back up. That's kind of interesting because it had fallen out of favor, but there's been a bit of a bid in the cannabis stocks. They've been one sector, I guess, that has benefited from the election because there's talk of Biden doing things, or the Democrats, to legalize marijuana more in the United States.
Why has the U.S. dollar been going down?
Well, I think it's because the U.S. deficits and trade in the budget deficit are just growing and growing, because government spending is increasing and the economy is had a very crazy year where it has not grown but is going to shrink. But we were coming into this year with big deficits already because the Trump tax cuts, and he increased spending too, helped do that. But now things are going to a whole new level. So I think we're getting to the point where this isn't just a move down in the dollar, but the start of a real secular trend that's going to last. And also, when the Federal Reserve lowered rates to 0 in March, they have, in effect, made the bond market uninvestable for normal people. When interest rates are 0, basically, or they're about 0.8% for a 10-year Treasury bond, you can't make anything on your money, and that causes people to wonder, what is the future of U.S. debt? If the Fed can never raise rates again, eventually that's a situation that's going to blow up. So I think that's causing people to foreigners to get out of the U.S. dollar. And there's also, and some of them are putting that money into gold and silver, of course, but it's also causing currencies to go up against the U.S. dollar. So, for example, the euro and the Swiss franc are going up, but what is also going up even faster is the Japanese yen and the Chinese yuan. And Asia is in a better position to come out of this coronavirus global recession situation next year because they've controlled the virus better. Japan hasn't even had 2,000 deaths, and they've got a population almost close to 100 million people. So I think that's part of it too. People, it's not just Americans that invest in the United States or Canadians that invest in their country in the United States, but people all over the world, and some of them are getting out, I guess, where they are, to get into their own countries or what they see as better alternatives.
Mike, how would you sum up what's happening right now?
Well, if you want a simple, 3-sentence deal, the Fed is pumping money, interest rates are zero, can't make money on bonds, so people are throwing more and more of their money into the U.S. stock market. You can get more on dividends buying a stock like Newmont than you can a treasury bond. And so everyone's getting into the stock market. Robinhood traders jumped into the market by the millions for the very first time. And at the same time, people around the whole world are looking for alternatives. And probably the biggest thing that did happen this month is the fact that the U.S. dollar has made a new low for this year. It actually is below the low last year too. That may be the biggest trend that will last over the next couple of years. That's happening right at this moment.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.